What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we continue to see that pullback after we were just going way too far, way too fast, and we're now coming into some critical support. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.66% as we continue to pull back from that overbought condition where we did get a close way outside the upper Bollinger Band. But as you can see, price action is now coming back down to our 5 EMA and back down to our support trend line. And we did see selling on decreasing volume today. So remember, the last time that we saw selling on decreasing volume, it was a bear trap. So if you see this pullback and you're starting to get bearish, I will warn you yet again, low volume selling as you go into support is always going to be a bear trap while you're in a bull trend. So do not make that same mistake if you did make that mistake last time, as we clearly see lower volume selling as we come into support and we still have the bull trend of higher lows and higher highs. Now also keep in mind the psychology behind trading is that the bulls know that big bear is waiting up there at SPY 421 and they do not want to go fight that bear with overbought conditions and just going way too far, way too fast, because that is going to significantly increase the probability the bear wins that battle. So what better way to defeat the bear than by recruiting bears to short squeeze right through that resistance, and that is exactly what we are currently seeing. Just like clockwork, we are continuing to see bearish sentiment picking up as we pull back on low volume selling. So if you are falling for this bear trap, you might want to rethink your trade plan because low volume selling is not a time to try to short a bull trend. Yes, you can make money shorting during a pullback, but you need to take your profits quickly because if you're trying to swing trade short positions while the trend is higher, you are going to eventually get short squeezed. So for that reason, we do have some critical support and critical risk levels on SPY at 407 and 403. And as long as we're above those levels, we are still in bear trap territory and we are still more than likely going to push higher and squeeze those shorts out, blast through SPY 416, which is the previous daily high, and then eventually see a much larger short squeeze that should allow the bulls to push through 421 and possibly even push all the way as high into the 430s. So let's not jump too far ahead. We still have some obstacles we need to tackle before we go that high, and the next will be breaking out above SPY 412 and exceeding that price target at 416, and this is a lot less likely if SPY loses this support trend line. So set your risk at either SPY 407 or 403 and just get a lot more risk off if we lose critical support. Remember, as traders, we're not worried about being right or wrong. We want to manage risk. So we do not want to get caught on the wrong side of the trade. If we lose support, we instantly want to get more risk off. But overall, just remember price action does tend to move in the direction of the trend. And as long as we are forming a bull trend, price action is going to more than likely continue to push higher. If we get a major rejection at the previous high and then start to see high volume selling, then and only then will we start to get more bearish that this is more than likely the end of a bear market relief rally and we're continuing the bear market. There is no reason to just assume we are going to continue the bear market. Wait for price action to confirm it. On the NASDAQ 100 triple Qs, we were down 0.3%, so you're definitely seeing some more relative strength in the tech sector because we are not getting a very steep pullback from the high, and that is exactly what you want to see in a bull market. You want to see the tech sector lead the way higher, and right now the tech sector is pulling back, but it is showing relative strength. The triple Qs need to break above the previous high just above 315, and then we will likely go battle the bear up there at 324, and the bear will be waiting at that level, so we are going to watch price action very closely at that resistance. Downside support levels and risk levels will be at 311 and 307.5, so as long as we are above critical support and we're very close to having this full bull trend, we will want to stay bullish in the triple Qs. Notice that volume is starting to fall off as we get this pullback, so if we start to see high volume buying yet again, that is going to trigger another short squeeze because we are seeing bears piling in, expecting the market to roll over and die from these prices. That is not a guarantee, so follow price action and ignore any biases you might have because right now we do have a bullish chart. In the Dow Jones, we were down 1.22%, so we definitely see the most relative weakness in the Dow Jones today, closing back down below the 5 EMA, closing at the low of the day, and closing below our support trend line. You can see the difference here is that the Dow Jones did sell off on increasing volume, so something in the Dow Jones did get hit very hard today that is causing a sell-off, but the Dow Jones is only one day below its first support level at 325, and it still needs to break down below 321 to start losing more critical support. That is something I will be paying close attention to, because if the Dow Jones is rolling over, it could be an early warning sign that the other indices are as well. If we do see a bounce from this level, we still have critical resistance up here at 333. So do pay attention to that critical support at 321. And if we do start to bounce, you will want to see that bull breakout above 329. In the Russell 2000 IWM ETF, we were pretty flat, only going down 0.1%. And intraday, the Russell 2000 did form another daily high, so we are still seeing a lot of bullish momentum in the small caps, and we are very close to having the full bull trend. Critical support in IWM is going to be right around 186 and 182, so as long as we're above critical support and we have this bull trend, you will want to stay bullish. The next upside price target where the bears are waiting will be at 191, and above 191 we should start to squeeze all the way up to about 200 and possibly even higher. On the ARKK ETF, we were up 2.67%, and ARKK continues to consolidate within this wedge, and we are going to get the bullish breakout above 47 and the bearish breakdown below 44, so just be patient and wait to see which direction this wedge breaks out. Above 47, I do expect to see a very impulsive bull push that could send us to 52 to 55, because there will be a lot of shorts getting squeezed out of this ETF, and you can see the Bollinger Bands are also squeezing very tightly, so it will be a major move once we get the breakout. Below 44 will more than likely continue the bear market, which means we could be coming back down to 36 to 33. So get a lot more bearish when we break and close below 44, and a lot more bullish when we break and close above 47. On the VIX, we were up 4.77%, and the VIX did find resistance right where we would want it to at 24, because that is just typical volatility during a pullback, and we want to see the VIX now getting crushed back down towards 20 to continue the next leg higher in the bull market. If the VIX starts spiking above 26 to 27, we're more than likely getting a continuation of the pullback and possibly even a continuation of the bear market. But right now the VIX is clearly in a bear trend and clearly heading lower, making lower lows and lower highs. So we do want to stay bullish while the VIX is below 24. On Bitcoin, we're currently down 1.17%, with Bitcoin trading right at 23,000 and still trading above our 20 simple moving average, but just below our 50 EMA. Overall, if you zoom out, this is still a higher low, higher high, and the next bull breakout will be the breakout above 24,000, and then we should start to run towards 28,000. In order to stay bullish, Bitcoin needs to stay above 21,000 to about 22,000, so set that as your risk and stay bullish as long as we're above those levels. If we lose critical support, we're more than likely coming back down to retest 19,000. On NVIDIA stock, we were up 0.46% as NVIDIA continues to get daily closing highs, and we are getting very close to testing the next resistance at 196. However, we do have some critical support that we need to stay above, and that is going to be at 181, 177, and 175. As long as we're above all three of those critical support levels, you can buy the dip. But if we break down below 175, you will want to look out below, because we could be coming back down to 161 or closing the gap at 158. On Tesla stock, we were up 1.1% as Tesla did test that price target yet again at 904, but as you can tell, we have still not closed above that level. So we are definitely seeing sellers above 904. That's going to make it very difficult to get to 970 if we can't get buyers above that level. So you will want to wait for a confirmation of a breakout before you stay bullish for the next price target at 970, because it is likely, if we're getting too many sellers at this level, that we need to come back down to 864 or 839. Stay bullish at those support levels, because it's more than likely still going to be higher lows and higher highs, but we may need a little bit more pullback before we can go any higher. If we start to get that bull breakout above 904, you can stay bullish, but use that as your risk level, because you don't want to get caught holding the bag if we're coming all the way back down to 839. On Apple stock, we were down 0.93% as Apple is also getting rejected at our price target at 163 and could be coming down to close the gap at 157 and test that critical support. However, if we find support, it's more than likely going to be right around 159, and then we could bounce and never actually close that gap, and then start trending towards the next price target at 166, and then closing this gap up here at 174. Stay bullish as long as we're above 157 and our 20 simple moving average and support zone right around 152, because as long as we're above support and we have this full bull trend, you do want to stay bullish in Apple stock. On the financial sector, we were down 1.1% as the financials closed that gap and now pulling back down to the 50 EMA to test it as support. If we bounce from here, that will be bullish, but if we break down through support, look for a retest of support below at 32.5. The industrial sector was down 1.05%, just getting way too far extended and due for that cool down, and we are getting very close to having a full bull trend. The healthcare sector was down 0.36%, pulling back after getting too far extended after hitting that price target around 134. And keep in mind, the healthcare sector does still have the full bull trend, so we are still likely pushing higher. The energy sector was down 0.23% today, struggling to close above 77.5, but still above the 50 EMA at 75. Stay bullish as long as we're above 75, because below that we could be coming all the way back down to about 72. So jumping back over to the S&P 500, do not fall for any bear traps of low volume selling. It is just correcting these overbought and overextended conditions before we try to push higher for that next leg higher. There are going to be a lot of bears piling into short positions and more than likely getting squeezed out of them. So try not to be part of that crowd. If you are shorting this market, have very well-defined risk and do not get caught on the wrong side of the trade. We clearly have a bull trend in the short term, so if you don't want to go long, wait for a rejection of resistance at a break of support and then you can short like the wind. Also, don't forget that I do have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.